China's third plenum defined the market's role in the Chinese economy as 决定性, decisive, rather than previously 基础性, merely basic. Big change in rhetoric and in the mandate for reform. But rhetoric, of course, does not necessarily translate into reality. The official communiqué released after the plenum still reiterated the traditional call to uphold the leading role of state ownership. Billed as the experimental test bed for this new phase of reform, Shanghai's Free Trade Zone is a very important indicator of the progress for these national reforms. Indeed, just before the project's inauguration, the name was changed from the Shanghai Free Trade Zone to the China-Shanghai Pilot Free Trade Zone. IHS expects that the policies rolled out within the Shanghai Free Trade Zone will be later rolled out to the rest of Shanghai and furthermore to the rest of China. But despite lofty expectations, the policy initiatives delivered so far have been very, very modest. So in this context, the question is, can we see Shanghai's Free Trade Zone as a leading indicator for the progress of reform at a national level? The motivations behind Shanghai's Free Trade Zone are an important part of this picture. One motivation is to arrest the decline of Shanghai's GDP growth rate. In 2011, Shanghai's GDP growth rate of 8.2 was second to last in China as a whole. By 2012, Shanghai had fallen to last place amongst all of China's provinces and provincial level municipalities. More widely and less widely known, Shanghai's Free Trade Zone is probably designed to pave the way for China's membership of the US-led Trans-Pacific Partnership, lest China be marginalized from what is likely to emerge as the Asia-Pacific region's most important trading organization. The communiqué plans to accelerate the establishment of free trade zones across China, and so far at least half a dozen municipalities or provinces have applied to set up free trade zones. These include Tianjin, Guangdong, Zhejiang, Chongqing, Fujian, and Hebei. IHS expects at least 1 to 2 of these to be approved in 2014. The greatest interest in Shanghai's Free Trade Zone is around financial reform. Within the third plenum, China's leaders did promise further capital account openings and marketization of the renminbi, but they are yet to issue detailed guidance for Shanghai's FTZ. Indeed, Shanghai's leaders have made it clear that this is a decision that they leave entirely up to Beijing. So watching the progress of Shanghai's Free Trade Zone and the progress of the other free trade zones can serve as a leading indicator for the progress of national level reforms. But overall, China's economic reform package and the implementation of it will be gradual, will be measured, and will be selective.